Hey, hello, this is Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Next Week, the weekly stock market analysis show where we analyze the technical charts and try to understand what happened in the market during the previous week and learn something from it and then plan for a better trade for the upcoming week. That's starting from tomorrow, October 9th, Monday 2023. Subscribe if you're not subscribed and share to friends and colleagues so that it reaches out more people. And you don't miss out on that every week. So let's get the charts and see what happened. The weekly charts, we have the same chart which shows that the multiple flag breakout is what's happening from a weekly medium term perspective, and we're still there in an ongoing rally. Same the Banknifty also, no doubt about that. Weekly charts are showing that it's within a trend line channel, absolutely well within that, with the Nifty able to move about the Fibonacci extension of 78.5 and then facing resistance on the top of the channel. The Banknifty is unable to break out of that 61.8 Fibonacci extension, and it has formed a M pattern and then fallen down to the bottom of the channel. Right, so that's what daily charts view. We have a parallel channel within a box consolidation. Absolutely at the bottom of the channel we bounced up and we fall again and then bounced up very close to the bottom of the consolidation box. Same Banknifty M pattern is formed well within a box, and price is well below the exponential moving average of 20 and 50 in the case of Nifty and the Banknifty both. And a trend line channel that's from the previous swing low is still intact. Right, price seems to have taken a bounce from that previous week. So last week it's actually a V-shaped move. 2 days of down move, making a swing low, and then 2 days of up move. Price action is still not bullish enough, unless it closes that gaps from where we fall down. But a good recovery, smart recovery is what we see. Weekly candles, you see it's a hammer. You can see on both indices. Hammer is a small body, so it's indecisive. But hammer has a very long wick, which indicates there is a strong support from the downside. Hammer is a potential for a reversal from a short-term trend. The trend that's ongoing, it's a potential for a reversal, but it's not confirmed, right? So that's a bounce up move that you can see from these candlesticks. Daily charts are showing that it's a 3 days of gap up. That means gaps would act as support. 2 gaps would act as support on the Nifty. And all of them are small bodies, which indicate there is indecisiveness. And the last one that's formed in the daily charts on Friday is a spinning top candle, but spinning top is nowhere on the top or on the bottom, so it's not that relevant, but it's indecisive and strong reversal is evident. Banknifty also 3 days of up move. Bodies are all small, making it indecisive. Spinning top at nowhere in the ongoing rally, so not relevant, but indecisive. That's what daily charts, daily candlesticks are showing. All the bands are clearly showing contraction sideways with a bearish bias. And absolute contraction, no sideways expansion, no expansion, no on either sides. Absolute consolidation is what's in the Nifty and the Banknifty with a bearish bias. Let's just check on the numbers quickly. So we have a flat close on Nifty, just 15 points up. Flat close is the weekly charts. On a week-to-week basis, Banknifty also we have a flat close, 0.5% downfall, 232 points. Hammer is formed on both. And double top is very much possible if there is a breach of the support zones happen. Remember, we have a 20% rally that's going. Daily charts Friday closes positive, not 8 points off, 0.5% up on Nifty, and 0.33% up on 47 points up on Banknifty. But we are still below the 20 and 50 exponential moving average on the daily charts. So we made a bounce up, attempted to reverse back after a fall, made a V-shaped move, we're basically consolidating. We have good supports down there. Could we breach that, or could we be able to take out the gap resistance on the upside is the question. All the bands absolutely show sideways consolidation for sure. Here we have support resistance levels. You can see that you have the first resistance in the Nifty seen as 9661, then 9726, 9800, 9879. Where we have a gap and a previous only number 20,000, and then likewise resistance upside. Downside you have a 19653, 19651, 19576, 19550, then 19457. Then you have 19243, which is a 100 exponential moving average. If that's please, then you go to you have a lot of things of 19200 gap, 19000 gap. So all supports outside 18877, and then finally 18800 is where the 200 exponential moving average is there. After similarly, you have the first resistance that has been taken out is at 44500 and 44664, 44687, 44850, 44950, 45100, 45400, 45600, 45782, 45900, 46000 on number levels. Downside, you have the supports that's seen at 44500, 44360, and 44323, which is a 100 exponential moving average. Very crucial to hold on that. 44,000 only number, 44,182, 43,832, and then you can fall up to 43,300, which is a 200 exponential moving average. The breach of that is dangerous. Basically, 43,600 is breached, then we have trouble. Make a note of that. Moment of the trend, if you're studying weekly on the left side and daily on the right side, both indices we are studying, you can see that the momentum is intact. Bullish zones with the divergence, momentum, potential divergence, bullish in nature. That's the Nifty, but Banknifty has slipped in the middle term, momentum in the sideways and falling. Daily momentum has picked up. You can see that it has rising. Banknifty has actually fallen into the bearish, but it's risen back and climbed into the sideways. So sideways rising up. Let's see momentum. Let's just see. So it's sideways rising, right, and bullish rising. So overall momentum is trying to pick up both the indices, but so trend is also hopeful because its bearishness is falling. That means it's less bearish now, both the indices, and the bullish momentum is yet to turn to rising bullishness. So momentum is intact on the bullish zones on the medium term, but recovering on the. This is as per the ATX. Make a note of that. Now, if you try to analyze the volatility in the open interest analysis, the VIX is 10% down. Interestingly, it's at 10.3 historic low levels, once again remaining in the low volatility range. Market has not risen up that much, although we had a 3 days of gap up. The fall in the VIX is substantially higher than the rise. 10% down a single week. 10.3 historic low levels. Very few times in history has it fallen back to the 10 VIX levels. So very low VIX, which is very dangerous because of the main rotating nature of the VIX index. Could spike up sharply from there, so be very cautious on that. We had tried to understand the open interest data from the Nifty futures OI, showing that short covering data, which is bullish in nature. Open interest for the options OI for the October 11th and 12th Nifty Bank, the option open interest. Options open interest is showing that PCR is not PCR is bullish, but Banknifty it's not bullish yet, but very close by that. So overall you can say it's bullish. Futures and options open interest OI. Look at this, unwinding is happening on the Nifty at the put side. The call unwinding is happening basically. So puts are strong. Here resistance is strong. So put support at 9500, 600 zones. Put resistance at 44. 500 zones or 45,000 nearby zones. Right. So levels, if you see, highest put writing is seen at 9600, highest call writing 20,000, very wide range 600 points. So call writing is expanding, then price may move in this range. Second highest put and call writing is seen at 9500 and 20,500, very wide range. 44,300 and 44,500 with narrow range Banknifty is what the option writer is seeing with the highest put and call writing is there, which could actually support and resistance. 42,000, 46,000, very wide range on the second level of highest call writing. That's what open interest is showing. So overall, futures OI and options OI is bullish. The range is medium range, not that very wide. No, neither is neither it is too small. Medium range. Banknifty is tighter range, 43,000 and 44,000. Right, so let's move ahead and see how the sectors perform. So, interestingly, the IT has recovered with an almost 2% up move. Realty also has recovered 2% up move. Momentum is also rise. So these are only two sectors that moved up recovered substantially last week. Otherwise, metal had a 1.5% down move, auto had a 1.2% down move, Pharma had 2% down move, FMCG had flat but down move. So all these sectors are not recovered actually. Only the IT and the realty is held up last week. And reality is the only sector that's ready to take in long positions if it all because momentum is bullish on both time frames. So other sectors may be following, right? But medium term charts, if you see, all are bullish still. All sectors across sector. If you take it, IT bullish momentum, metal bullish momentum, auto bullish momentum, pharma bullish momentum, FMCG bullish momentum, reality bullish momentum. No, momentum is intact on the medium term. But, no, both are bullish only in the reality sector, both time frame bullishness. So there's some divergence also seen on the auto and pharma and FMCG. So three C sectors are on the all-time high levels. Consolidating pullback is happening, but there is divergence. If it works out, it can be big another rally continuation. Index heavyweights stocks, the 7 stocks that contributes most to the index. HDFC Bank sideways, Lion sideways, HDFC Bank sideways, Kodak Bank sideways, ITC sideways. So only Infi and TCS is in the bull zones among the 7 heavyweight stocks. The reason is that the selling is up to 5% on all these heavyweights, right? But otherwise, HDFC seems to have recovered from that fall. That is almost breaching the trend line. Would recover soon buybacks. So every time it moves below, moves very close to that 40 RSI, HDFC seems to be worse. So HDFC is basically consulting sideways up and down within a range for multiple years now. Nothing is happening there, but probably this is a good time for investing as fundamentally the stock is strong. Lions also seems to be consolidating after hitting the top of that consolidation zone. Now it may be heading down. But there is a trend line. If there is breach, then it may fall down. Otherwise, consolidate there and again move up. HDFC Bank is an all-time high, step to the sideways and then it's a trend line of descending wedge. Get note of that and watch out. So it may stay in that trend for a long time. But the fact is that, including Kodak Bank, ITC, and all the bank stocks, all of the major heavyweights are all sideways. Look at this Nifty, Infi and TCS. They are on the bull zones. TCS is doing extremely well. It's wide range, but there is a resistance upside for the at the move. It also will know the Nasdaq and the US markets as well. So otherwise, that's a story. Two sectors are leading now. At least two sectors are leading now. Others are taking its own sweet time to join the party. And the selling is happening because of the FI selling in the heavyweights. The FI selling includes 8,400 crores of selling. It's 11th consecutive week of selling that's happening, and that's bringing the years about half of that, but not enough to compensate for the fall. Net longs Friday is also on the downside. So this is a worrying factor, and it has to change if the market is to rally again. And then it will be just the eyes that supporting and holding the market. Right? Let's study the global markets and the global currencies, commodities, and all that. Dollar index is flat. USD currency pair is also flat. 0.05, 0.08. Or 6.10 is what the dollar is, and 83.9 is the rupee USD is. So dollar, it's interesting. It is a breakout from a cup and handle. Moment visible zones. It's worry. Again, it's ascending wedge top. Some central bank intervention is happening. That's holding the price from going out of this. Consolidating on the top. Anything will happen on the either side. Moment is almost bullish, but this week is flat on both. Crude oil nearly 10% crash down from the top of that parallel channel. It's a big relief. More than slip to the sideways. Gold again crash. Continuation of downfall in the bear zones. Bearishness has come in. People are no longer finding gold as a safe haven. They are finding alternate investments or bonds or something like that. That's the reason why gold is falling. Those markets, if you see, you have the Dow Jones, which is interest in the top and falling. Same with the Nasdaq and same with S&P 500 on the bottom. So, but you can see a big size, a good recovery attempt is seen in S&P 500 and Dow Jones. It shows that the reversal may have ended, and then market is trying to reverse the other side once again. Right? That's begin to happen in the Nasdaq. The momentum is sideways otherwise. This market into its indices are in the resistance. Next, after having studied all this, let's conclude. Let's first get into some actionable stock picks. Two stock picks, HFC AMC. It is not a confirmed trade. If at all there is a breakout that happens from the pattern, that's a long opportunity. Have tight stop losses. Reason of the trade is bullish momentum with this trend and potential breakout. TCS next stock pick. Solid bullish candle, good volumes, range shift of momentum with a bullish momentum bounce from the RSI above 60. Trend bullish, rising up. It's a trend line and that is already confirmed a breakout. Good potential entry right away. Have tight stop loss below the previous week candle. So two stock TCS and HDFC Asset Management AMC. Let's get into another action for the next week. It's a options weekly strategy on the Nifty. It's a Batman strategy. It's completely hedged. You know what exactly your risk is. POP is good. Range is good as long as you exit one day before the expiry. RiskReward is also good if you exit early. Target for 1 to 2% only. It's a net credit strategy, and then it's completely hedged and risk defined, and they can increase your position size. So basically, you're selling ATMs on both sides. And you're having inside hedges and outside hedges. But the selling would be double of what the buying is, as buying of the inside hedge. That's completely hedged. Okay. So you have a constant profit as long as market remains in this range in the middle. And if it spikes above, you profit even more. And if it breaches out, get out or adjust it on the other side, on the opposite sides, to make it even more narrower, or exit at the breach of that break-even point. That's it, wrap up. So basically, last week was a V-shaped move, a recovery attempt, right? A reversal attempt, and finally the close of the indecisive, just like last week. So it's a correction of 4 to 5% that's happened, and market seems to be consolidating. But remember, we are in a 20% rally, and 5% is okay. After a selling continuation, using dices at resistance, and weak rupee, and the oil is not. Oil is also not at a higher level, although it has fallen down. So industry patterns, momentum falling, trend falling, not bullish enough PCR in the Banknifty, bearish bias, sideways movement on the downward demand. So all this gives hope for the BS that the more fall can come in. But the short covering features saw a build up. CIP bounce that happened last week. Confluence of trend lines from where the bounce that happened last week. Trend line, 20 weekly extremist moving average, trend line channel, gap support zones. All these are good support zones. So this all gives hope for the bulls for the next week. So market is basically trying to attempt to reverse after some correction for the top. The top means the all-time high levels of 20,222. And now it's just consolidating. So the key remains the fact that are they going to hold on that support zone for the consolidation of 3 months. So that's 19,200 or the 43,600 zones, or would be able to break out of that gap resistance that has formed while it is crashing down. So it's a question. So market view for the next week from my side would be neutral to mild bullishness because of the continuation of the gap up that happened last week. So global gives not that great. It's a fear of recession, inflation, interest rates, war, and all that. Israel war has come in last night. We don't know how the market will react to that, how it escalates and all that. It's out of our hands. So black swan events could come in anytime and screw up all of our technical analysis and views and all that straight in one day. So beware of that, and always have hedge positions. This overnight risk should not be taken without hedging. Also, these corrections are phases where you can invest and do an SIP more investments, or you can even use option strategies like rental income strategies like covered calls and put cash secured puts and all that strategies. Separate playlist videos are there for those strategies. Check out that. So range for the next week is 19,000, 20,000, 43,600 and 46,000. So as long as 19,200 and 44,000 is not breached, there's some force for a continuous rally in the short term. Otherwise, short term is breached. That's what it understands. So that's what I have. The market view remains to be mild bullish with a neutral bias. So subscribe if you're not subscribed and watching this. If you're watching this, please like and put in your comments so that it helps us to improve better. Subscribe and share to friends so that more people are aware of that, and then you get subscriptions as well. So if you're interested in monthly subscription on the Telegram channel, check out the description. Also, make it note that we have all these social media where we have regular daily technical charts analysis that is posted there. So subscribe to that, and you don't have to wait till the end of the week to get to see this channel to get a market view. We have daily views that is posted in this channel. Subscribe to them, please. Yep. So happy trading, happy learning, happy investing. Bye bye.